Welcome to Fisher Webinars. The following is a recording of Is the Pulp Market Headed for Oversupply? Originally recorded on Wednesday, September 30th, 2015.
My name's Clay Enos, the Senior Consultant for Fisher International, and for the next 20 or 30 minutes we're going to talk about the global market pulp supply-demand balance. Specifically, we're going to address the question of whether or not the global Kraft market is headed towards oversupply. So before we get started, I'd just like to make a couple of points right up front. First of all, if you're a FisherSolve subscriber, it should be possible for you to do or perform the same analysis. You could even utilize your own assumptions if you wish with the FisherSolve tool. Secondly, just to note, throughout today's presentation I've chosen to use capacity units of finished short tons, currency of US dollars. If you'd like to know more about how this type of analysis is performed using FisherSolve, I'd encourage you either to reach out to myself or to another member of Fisher's senior consulting team, and we'd be more than happy to assist you. So let's go ahead and get started. And if you're a market pulp producer, maybe a consumer, or just an interested third party within the industry, I'm sure nearly all of you have seen headlines like these. In fact, maybe it even seems like they're coming at a ever-increasing rate over the past 5 or 10 years, right? So new mills or pulping lines are being brought online, each one maybe seemingly larger and more efficient than the next. Might even be so well vertically integrated that manufacturing costs are low. Is that really the case? Well, let's take a look at the visual in the next slide that helps illustrate what's been happening. Here we're looking at a bubble chart showing us all the market Kraft production lines installed in the last 30 years or so, since 1985. You can see the year of installation along the x-axis here on the bottom, and there's a measure of relative efficiency along the y-axis on the left. The size of the bubble indicates the relative size of each production line. So sure enough, if we see and focus on the number and quantity and size of the bubbles here in the upper right-hand quadrant, indeed the lines built here since the year 2000 more or less tend to be large and efficient. Well, what about the manufacturing costs of these lines? This tells us they're large and they may be efficient, but where do the costs fall out? Well, let's take a look at this cost curve. Again, this cost curve shows all the market Kraft lines worldwide, and you can see that I've colored it by region. So the yellow bars here indicate Latin American sites, and blue indicates Europeans, and so forth. The width of the bar across the x-axis represents the production capacity of each line. The wider the bar, the more capacity. And of course, cash cost is shown here along the y-axis. In this case, US dollars per finished short ton, FOB mill site, so there's no transportation included in this curve. If we perform a little bit of highlighting here to illustrate only the sites that have been built since 2000, and there it goes, you can see that this capacity added since 2000 tends to dominate the left side of the curve. So with this information supporting what maybe you're already thinking or feeling, it's only natural to have a few questions. Questions like, boy, are we really headed for oversupply? And if so, how many producers might fall off the right-hand side of one of these cost curves? Well, today we're going to use FisherSolve to define trends in the markets for both pulp and paper in order to show whether the announced capacity expansions may cause imbalance in the global pulp market. Let's start that by framing up what that market looks like. So there are over 200 producers of market Kraft worldwide. I'll show you those on this chart. And here they are. In addition, there are more than 2,500 operating paper mills, and here they are in the darker blue. A detailed analysis at a really granular level can become very tedious, and there are a lot of reasons for that. Some of those factors include things like high volatility of energy price, fluctuating exchange rates, in some cases regional or local influence of regulation or politics over mills' operating decisions, new technology substitution, and a variety of other factors. So today, we're going to take a little simpler approach. We're going to utilize production information from Fisher Solve, as well as market insight from our capacity trend module. So if we start with the most accurate and complete data set, we perform thorough and proper analysis. We apply what we know about historical behavior of the market and its major players. We should be able to draw accurate conclusions about the future. So let's get started by examining the market pulp supply side of our supply-demand balance. This chart shows us announced new capacity in market pulp, and we're looking at a 5-year view from our capacity trend module. The height of the bar indicates how many tons expected in a given year. So you can see the largest bar and the most announced capacity coming online, and this is in market Kraft, remember, is 2017. We'll focus on this year. Here's a breakdown of what 2017 looks like by grade, and you can see the bulk of the new capacity is going to be in hardwood Kraft, specifically eucalyptus. There's some dissolving pulp here in a reasonable fraction, but we're going to set that aside for this analysis. So focusing on the 4.5 million tons expected in hardwood Kraft. Okay, so that's the announcement. That's what producers are saying will be brought online, but what do we expect will actually be realized in the market? Are we going to see all of that? Well, if you take the 4.5 million tons, our market models tell us that on average, only a fraction of that will reach market. On average, about 67%. And the biggest reason is investments that don't occur experience significant delay. So if we take that into account and factor only 67% of this 4.5 million tons, the result is 3 million tons that's most likely to make it to market in 2017. Well, okay, so that corporate announcement, that might be great for understanding the growth plan or intent of a company, but very few companies like to share their shutdown plans in advance. But they happen. In fact, in market hardwood Kraft alone, this is a trend of capacity shutdown over the past 8 years. Again, the height of the bar below the zero line indicates the amount of capacity removed from the market in each of these years. Since 2007, hardwood Kraft shutdowns have averaged 700,000 tons annually. Well, we recognize that maybe the late 2000s here aren't the most representative period, and we should account for that in our analysis, so let's find a more conservative estimate. And we should be safe estimating about 500,000 ton reduction out through 2017. Well, if we work with that, how much net capacity increase will we see? Well, that math's pretty straightforward. We'll use our assumption of 500,000 tons coming out of the market due to shutdowns, and we can calculate our 3 million tons of expected new capacity less the 500,000 tons of shutdown, and we arrive at a net of 2.5 million tons of hardwood Kraft. Well, that's fine, you might say, but what about market softwood? Isn't there softwood capacity coming online? How does that influence our balance? Well, we have looked at that, and mostly in the interest of time, I haven't included the slides to detail the analysis, but I can summarize what the story is. And the story is, recently the trends in market capacity really show a flat to slightly declining capacity in softwood Kraft. Announced new capacity is modest when you compare it with hardwood Kraft. So we're going to work with the assumption that market softwood Kraft capacity remains flat through 2017. Okay, so what if we expect this net Kraft capacity of 2.5 million tons to come online? How's that going to balance with demand? Well, in order to understand that, we need to do is take a look at the future of paper capacity. And we can walk through a similar exercise on paper capacity to help understand the balance. So let's take a look at some of those trends now. So if you're a North American or European producer, you're probably all too familiar with this trend. What we're seeing here is capacity change year over year, and it's showing steady decline in the European and North American markets across all grades. Significantly negative bar in the year 2009 due to some recession activity, and while you can see that there's some projected growth out in these years of 2016 and 17, very similar to how we just walked through the pulp shutdowns, there aren't a lot of announced shutdowns, and it's our expectation that these will continue to show a downward trend. Well, fortunately, the decline in Europe and North America is offset by other regions which have been experiencing significant growth, most notably the Asia-Pacific region and China even more specifically. You can see that through the last 8 years they've experienced a sum of close to 90 million tons of growth, with further growth announced and expected. Here's another view that illustrates a similar story, but rather than capacity change, here we're summing the entire capacity of the global paper market, and this excludes market pulp. And you can see through 8 years we've experienced growth. We're approaching 500 million tons of global capacity annually. And if you calculate growth in terms of compound annual growth rate, you can see a rate of 1.6% since 2007. Here's another view illustrating the same story, and in this case we're looking at capacity change by region, and the size of the bar either above or below the zero line indicates by region how much capacity has expanded or contracted. So in the red region of Asia Pacific, you can see in 2007 we've experienced close to 12 million tons of growth, where in Europe and North America there's been decline of, we'll say maybe 2 to 2.5 million tons each. The point to this trend is that while there have been closures, and there certainly have been and will likely to continue to be some closures, they have been more than offset by growth in other regions. There's another way to illustrate that. In fact, there have been close to 1,600 new production lines brought online since 2007 around the globe, tissue and towel dominating that number. And when viewed in volume terms, nearly 105 million tons of production have come online in that period. The majority of it being in paper-only manufacture, meaning fiber coming from non-integrated, non-virgin integrated sources. So as we just illustrated, the global paper capacity is just coming in shy of 500 million tons per year. And since 2007, growth is measured by compound annual growth rate has been at 1.6%. On the other hand, if you attempted to forecast forward based on capacity announcements, that might yield you a growth rate expectation of closer to 3.1%. So, which growth rate should we use for our analysis? Well, the best answer is probably neither of these. So here's what we're going to do. Instead, our approach is going to be to perform a sensitivity type analysis using 2 scenarios to bracket what we may expect to be the extremes of market growth. And we'll call the historical growth the base case and the higher rate of growth our announced case. Here's a table showing you what the base case will look like, and here's that 1.6 number and the announced case of 3.1%. This table is broken down further by major grade category, and you can see we've done that because grades like newsprint or printing and writing have experienced steady decline, while some other markets, notably tissue and towel or maybe packaging, have experienced growth. Well, why is that important? Well, that's important because the next step is to calculate the specific pulp demand for these scenarios, and as you'll see, the demand is different by grade. Now here's our methodology. It's reasonable to assume that demand for market pulp is going to correlate proportionally with paper capacity. Unfortunately, it doesn't occur at the same rate for each grade. Using Fisher Solve, we can accurately describe each grade using this methodology. So first we're going to take each major grade group and we'll determine the ratio of purchased fiber to total fiber as a percentage. We're going to figure out how much fiber is purchased, and then we'll describe the ratio of Kraft pulp in that purchased fraction. And then finally we'll take a look at that purchased fraction of Kraft and we'll break it down by hardwood or softwood. So here's the first step. In this chart, the darker green bars show the total Furnish consumed by major grade. And you can see packaging here at just a little north of 280 million tons of fiber consumed, Furnish consumed, where the purchased fraction is much smaller and represented by the lighter green bar. Here are some percentages that break that down in percent terms. Fairly straightforward conclusions to draw might be things like packaging, well, it consumes the most fiber, but only a very small fraction, or 9.5%, is purchased. In our next step, we'll take that purchased fraction, and that's represented by the complete height of these bars, and we'll look at the Kraft fraction within it. So if we stay with packaging, which is moved down here on our chart, well, there was 9.5% of purchased fiber per the last chart. In this one, we see that of that 9.5%, a little greater than 50% is Kraft. Some conclusions here might be, well, hey, tissue and specialty, look at these bars here where we have 94% and 80%. There's a high Kraft percentage in those grades. And then finally, we'll take that Kraft percent and break it down and show you the hardwood percent versus softwood by grade. And here we're illustrating that hardwood Kraft accounts for more than half the purchased Kraft. Okay, so if we take this data and we look at it for all the grades and all the sites globally producing these grades, we tabulate all that data offline and we build it into some tables, we're able to summarize for our two cases, and here's how that works. Again, if we look at packaging, in the base case, we see this 281 million tons of total Furnish, and the amount purchased Kraft is 5%. And as you might recall, there were 9.5% of this that were purchased, and then about half of that was Kraft, and that gets us to about this 5% within our significant digits. If you break it down by hardwood and softwood, you can see those sum to the 5. So if you take the tons and multiply it by the percent Kraft and take the compound annual growth rate into account, you wind up with a total increased demand for fiber. In some cases, it would be decreased based on whether the growth rate is positive or negative. Those all roll up into these numbers in the bottom right corner. So for our base case, we can see the total Kraft demand is an increase of just a little under 1.5 million tons. In our announced capacity case, we're just north of 3 million tons. Okay, so let's summarize what that means and draw some conclusions from our data. As you recall, earlier we posited 2.5 million tons of increased market hardwood Kraft supply, and we discussed market softwood Kraft remaining flat. Well, in both of our demand scenarios, we come up short on hardwood Kraft demand. But trends in the industry lead us to believe that the first market adjustment will be further substitution of hardwood for softwood. And why do we think that's going to happen? I'll highlight a few reasons here. One's fairly straightforward, and it's simply that in general there's favorable pricing for hardwood Kraft relative to softwood Kraft. And we realize that it's not always applicable, and whether there are strength or quality demands for the product, in a lot of cases there can be some further hardwood for softwood substitution, and we expect that to continue. Secondly, regional furnish percentages support this trend continuing, and here's what I mean by that. Simply put, although we've taken a look at average percentages globally, in reality, each region has a different demand for hardwood and softwood balance. So if you take a representative and important market segment like tissue, because there's growth, tissue in China has a higher hardwood kraft fraction than does tissue coming online in North America or Europe. And as that continues to occur, we expect those furnished percentages to continue to shift towards hardwood kraft. Finally, it's important to remember that we're not just talking about this 2.5 million tons that are incremental tons coming online. There's an existing consumer base here, and the market for this product of kraft, market kraft, is close to 70 million tons. So it only takes a small shift by consumers to move that balance significantly. So what we're going to do is compare the increase in hardwood kraft supply against the total market kraft demand, assuming that this substitution of hardwood for softwood will continue at some rate. If we do so, taking the announced case first, it's a little simpler to describe. Well, in this case, our 2.5 million tons of increased supply is matched against 3 million tons of market kraft demand. So if paper capacity increases as it's announced to do, and pulp is as we posited, we can expect the hardwood kraft supply increases will be absorbed by the market. Fair enough. If we more closely examine the base case, now in this case, the 2.5 million tons of supply sees a demand increase that's just shy of 1.5 million tons. So we're a million tons off. And in this case, if capacity, that's paper capacity, increases remain consistent with the compound annual growth rate we've seen historically, there'll be roughly 1 million tons of oversupply in the market. Okay, so what does that oversupply scenario look like? What's likely to happen if that's what plays out based on the historical growth rates? Well, let's do a little thought experiment here with a cost curve. And here's a cost curve. Again, it's the same curve we saw earlier with the market kraft lines globally. And if you believe that market kraft is in oversupply, so if we speculate that there's an oversupply situation, and you further understand that this market is fairly fragmented, it's probably reasonable to assume that pricing for this market is on the floor. And the price floor might be defined somewhere around where I've drawn this line across the curve. It's supported by the cost of the producers, the cost of manufacture, near the middle to the outside of the fourth quartile on this cost curve. So let's just assume it's in this neighborhood. Well, in the oversupply situation, it's likely that what may happen is high-cost producers exit. That would be some of these folks over here on the right side of this curve. If that happens, the floor is no longer supported by their cost of manufacture, and it might lower, looking like this. When that floor comes down, the price will follow, and pricing for this market will decrease. So as conclusions we may draw, the global market pulp supply has seen large expansion since 2000. The bulk of that's been in Latin America. Remember that all new paper capacity is not created equal in terms of market pulp demand. You need to perform careful analysis to understand purchase pulp demand by grade. If we only see modest growth in paper capacity, there will be an oversupply in the pulp market. And in this situation, we most likely see high-cost producers exit the market and prices fall. Similarly, if all the announced pulp capacity does come on stream, it's again likely to cause an oversupply of pulp. So the market's ability to absorb the new pulp capacity really depends on producers delivering on their announced expansion plans. And finally, to summarize, the global kraft pulp market is highly nuanced, and it's one where relatively small shifts in demand can mean the difference between oversupply and undersupply. And remember, we're talking about that 70 million ton market, not just the marginal tons. Additionally, remember that factors that create these supply-demand balances, they interact with each other all the time. What I mean by that is if you take an example where perhaps we have oversupply, and oversupply in the pulp market might make pulp prices lower. We've been through that. And in the situation where pulp prices are low, that might discourage new projects. Well, what also might happen is that if pulp prices are low, it might make new non-integrated paper projects more attractive, which then soaks up the oversupply. So it's interactions like these that make markets complex and are also what make traditional forecasting methods unreliable. At Fisher, we monitor all pulp and paper markets, and we utilize modeling methods that account for the interactions, allowing us to predict the future of markets much more reliably.